Bro, what am I even looking at, dude?
Bro, it's simple. If you can scroll TikTok, you can trade. I'm gonna show you how. That's it.
What's our leverage, bro?
Bro, like I said, relax, bro. We got edge flow. we got risk management built into it. So I'm not losing that 10K today, man.
You lost money, bro.
My name is Brett Go and I've been trading for 7 years. Made over $1.56 million this year. And so far I've documented every single trade live on my second channel, Brett Trade. In addition to that, I've helped hundreds of students pass their funding challenges, become six-figure funded traders. And today, I'm gonna break it down for my good friend right here in a way where even like a 5-year-old can understand.
Yes, but I'm not 5-year-old, so you can explain like a 20-year-old.
Okay.
So just a little brief. I have never traded at Forex before. I don't know what the he's gonna teach me. I don't know what a lot size is. I don't know what I know what resistance and support level is, but I don't know if he starts going to the technical analysis, right? I'm gone.
What's a lot size?
I don't know. Is it like margin trading?
Ish. Not really. Okay, but anyways, yeah, you can see complete beginner. If you guys have watched the Road to 10 Man vlog, you know who he is. He's my best friend. His name is Jarren. And yeah, this is gonna be a very good representation of like a professional trader teaching like a beginner trader. So if you're a beginner, or even if you're like an intermediate trader and you want to have some good entertainment to watch how a professional break it down, this video is for you. Yeah.
So I've been with bro for like 2 years. I've seen him trade inside army. I've seen him trade in Dubai.
Yep.
And bro made bucks lah. He's a 7-figure trader, and like I'm just sitting down there when I'm scrolling TikTok. Then he's down there like I hear like a sound and like, bro, you just made how much? You know, that kind of thing. So
Yeah.
I was always interested. So I asked him last week whether he can teach me, and he said yes. It's free class.
Yeah, just want to say, I'm not a patient guy. So I'll show him exactly how I teach beginners inside Edgeflow, right? Let's dive in.
Let's go.
Cool. All right, so Jarren, in order to master trading, you need the 3 M's. Okay, the 3 M's is methodology, money management, and mindset. And to me, I view it as like a stool, you know, like a chair, and then there's like 3 legs below it. If you take away one of the legs, the chair is gonna fall. Same thing with these 3 M's. You need all 3. You can't do it without any one of these 3. So the first M is methodology. Quite simply put, is how you trade. Okay, it's what you do when you go into a blank chart. How do you analyze the charts to come up with like a bias? So this is the code. If you don't know what you're looking for, you will take every setup that looks shiny. And to me, I think the hard part is not spotting trading opportunities, but it's ignoring everything else. Which is why it's so important for you to have like a very clear criteria on what you should be looking out for, so you know exactly when to trade and when not to trade. And that's what we are doing with methodology. Next, we got money management. And this is a quote that I always say to my students. Risk management is a love letter that you send to your future self. Which means that when you actually manage your money properly, you are ensuring that you don't blow up, you last longer in the game, so that eventually you can last long enough in this game to become profitable. So basically, money management is how you manage your capital. And then mindset is how you manage yourself. In trading, it's not about getting higher returns. It's about ensuring that you make fewer stupid decisions, so you can take fewer losses and you can actually maximize your profits. So this is where your mind is gonna be in a way like every single step of the way, right? Because we are not biologically wired to actually look at candlestick charts, right? Like if you think back about like since the dawn of time, you know, we were cavemen. We are not used to like sitting down and look at a bunch of like pixels on the screen and like get emotional. So your emotions is gonna get in the way, and if you don't have like a proper mindset, you're gonna fail, right? So being great at technical analysis but neglecting mindset mastery is like assembling a rifle perfectly and then missing every shot because you never learned how to aim. So those are the 3 M's. Do you have any knowledge on like what I mean right now?
Bro, let's just make some money.
Let's dive into it.
Wait, I'm just kidding. So and I actually heard a quote that they say when you trade, right, every trader finds every opportunity to say no to the trade. And then they only say yes when it's like really, really irresistible. Is it true?
Yeah. So to me, I think that a good trade idea where it's like a 2x4 truck hitting your head. It's like it will just jump right at you. Like you just know if you have like a clear and structured plan, it will just jump at you. And that's the trade that you want to be taking. right? But if you're feeling like, maybe I should have entered for the trade, maybe I don't, like if you're iffy about it, you don't feel confident about it, then that's probably not like the trade either that you should be taking. And if that's the case, then if you end up taking that trade, you're just gonna be like forcing trades.
Okay. Okay, cool. Yeah, that's all I need to know. So how much are you risking today?
$10,000. So as you guys know, today we are letting Jarren trade with $10,000. Are you excited, bro?
Yeah, bro, that's my monthly pay right there.
Hell yeah. Hell yeah. For some people, it's like their annual pay, you know?
Okay. It's my annual pay right there.
Okay, so the first thing we want to go through is the methodology, right? Is to ensure that you develop like a proven trading strategy.
Okay.
So you know, once again, exactly what you should be looking out for. Right, so I'm gonna just briefly explain how the chart actually works. Okay,
Are we day trading? Like, are we trading minutes, hours, or what?
We are probably gonna be like trading and holding the trade for like a few minutes up to like a few hours. So it's like a mix between scalping, which is like high frequency trading, and intraday trading where you're holding the trade within 24 hours, right? So we are ensuring that we close the trade before we sleep. That's it.
Oh, okay, got it.
Yeah. Before I started filming this video, Jarren was saying that he doesn't understand what's higher highs and higher lows, lower highs and lower lows. So I'm gonna break it down for him, right? So the first thing you must understand about the markets is that it will never ever move up or down in a straight line just like this. Okay. It will always move in cycles. It will move from imbalance to balance to imbalance to balance and imbalance again. And treat it as a car. You know, like when you drive a car down the road, right, you have like let's say like a 50 km drive. Your gas is eventually gonna run out. Like your fuel is eventually gonna run out. So it needs to stop at a gas station to get more fuel. In the market, it means liquidity before it can continue going up again, right? So that's like the next phase of imbalance. So that's what you need to understand. The market will always move from imbalance to balance because it's actively trying to find fair value.
Okay.
Yep. And the next thing is, since price will not go up in a straight line just like this, nor it will go down in a straight line just like this, like I said, it has to create like some form of pauses, right? Yep. So that is where market structure comes in. Okay. So in the market, there's only three types of trend direction, right? So there's the uptrend, and in the uptrend, the market is gonna go up, pull back, goes up, pulls back, and then goes up even further. So this is what we mean by higher highs and higher lows, which pretty much says that this high, this swing high here, is higher than the previous swing high. And this low here is higher than the previous swing low.
Oh, okay.
Higher low, yeah.
Oh, okay.
That's
it makes
it,
sense
man.
now.
That makes sense.
So this higher high, then it's higher low.
Yeah. So you basically compare like the most recent low with the previous low. And if it's higher, then we know that we are actually in an uptrend. But if it's lower, right? So in this case, price in the downtrend, it creates lower highs and lower lows. So if you compare the most recent swing high and you realize that it's lower than the previous swing high.
Yeah, lower lows.
Lower highs.
Lower highs, sorry.
Lower highs.
Lower highs. And then this is lower lows.
This is lower lows, that's right. So that's the market in a downtrend. But a lot of times the market will be trending so nicely. There's gonna be times when the market is going sideways, right? So that's the third type of trend direction where you can't establish clear trend direction, which means you can't spot higher highs and higher lows or lower highs and lower lows. So as a result, the market is just this. So you can see there is no higher highs, there is no lower lows or whatever. It's just going in a sideways just like this. So in this particular case, guess what? It's the balance that we were talking about just now. You know, the imbalance, balance, imbalance, balance, and an imbalance again.
Oh, this is happening in like the center.
Right here, yeah, exactly. So those are the three types of trend direction in the market. So just to give you like a quick test, all right, just a quick one. Okay, let me just go.
Hey guys, I think I learned like 10 years of trading knowledge right here.
That was like,
wait, you don't understand. I've been hearing everybody say this, and I've been hearing him say this to the camera for like a solid year, dude. I don't know what the he's saying. This is good.
That was like just 1%.
Oh shit. Okay.
Okay, so quick test. What trend direction is this?
It's a bearish.
Bearish direction, so it's a downtrend.
It's a downtrend. Yeah.
Yep. So if, let's say I go down to the 5-minute time frame.
Different time frames, it will be different uptrend, downtrend.
Yeah. So it depends because like, there's this concept called price is fractal, which means that whatever happens on the higher time frame must first happen on the lower time frame itself. So the patterns that we see on the 5-minute time frame, it's pretty much forming so that it can affect what happens on the higher time frame itself. So you can see like right now, the lower time frame on the 5 minute, it could be like, let's say consolidating, right?
Yeah.
But this could just be like a short pause in price on the higher time frame so that it can continue going down. So this is what price will look like on the higher time frame. But right now, if I zoom in on the lower time frame, this is where we are at.
Okay, got it. Yeah.
Yeah.
Makes sense.
So what trend direction is this?
So wait. So you zoom in or zoom out now?
Like this. Right now we are on the 5 minute time frame. Just now I showed you, I think the 15 minute or the 1 hour time frame.
If you zoom out, then it's still the downtrend lah.
Yeah. If you zoom out just like this, you see that we're in the downtrend, right? You can see lower highs, lower lows, and then this is potentially like a new lower high being formed, so that price can continue going down even further. Yeah, so right now it's in that like consolidation phase, but if you look at the higher time frame, it's actually like a downtrend. Yeah, get it?
Yeah.
Cool.
Yeah, I have a question.
Yeah.
So maybe stupid question, but like okay, let's say if I zoom out like this, clearly it's a downtrend, right? But if I zoom in like this, then people will think like this is like an uptrend here or something like that.
Yeah. So it's all about understanding like the context and objective of price. So at any point of time, like I said, you must understand that price can either be continuing, right? So once again, if I draw like what I've just drawn to you, when price is going down just like this, let's say in a downtrend, it's in a continuation phase.
Yeah.
But like I said, price is gonna pause to get more fuel before going down, right?
Yeah.
If that's the case, it's gonna pull back, right? It's gonna make like a little retracement just like this. So this is price in a pullback phase.
Okay, my question is, so should people look at the like this one? Basically, people should look at the zoomed out chart in order to predict whether it's a down.
It depends because, like I said, right here this is the pullback, right?
Yeah.
So right now we know that price have shifted bullish in the lower time frame so that it can actually facilitate the pullback. So if I just stay on the lower time frame alone, I might think there's an uptrend. But when in reality, if I zoom out and look at the bigger picture, I realize that it's actually just a minor pullback, right, for price to continue going down even further.
Right.
Yeah.
So, but what if I'm trading like, what if I'm swing trading on weeks? So then I'll look at this. But then if I'm swing trading on like one minute charts, then I would have to look a lot closer. Is that how it works?
So swing trading is for people who hold the trade for like days and weeks, right? So that's more of like day trading or like scalping. If you're looking at the chart on the 1 minute time frame itself. But basically, no matter whether you are a swing trader, a day trader, or a scalper, right? Whatever your trading style is, you still have to look at the lower time frame. And you also need to ensure that you don't forget about the higher time frame, because the higher time frame determines like where price is gonna go, but the lower time frame will start shifting, right? Start adjusting so that it can facilitate the higher time frame move.
So for beginners, what I've gotten from this is basically right now we're looking. You have to decide whether now it's like a higher time frame or a lower time frame. Is it?
No, basically the lower time frame move, it has to happen first.
Oh, wait. No.
Yeah.
As in like, how do I know whether it's a lower time frame right now or is it a higher time frame right now?
So basically, if you are a trader, right, whether you're a swing trader, day trader, or scalper, you will have 3 set of time frame, right? So one is your higher time frame, one is your medium time frame, and one is your lower time frame itself. Okay, so 3 sets of time frame. So higher time frame is the one that you do your overall analysis, right? So you kind of identify the trend direction, you know where price is going to go over the next few days. And then medium time frame, that is the time frame where you actually try to draw your point of interest, which I'm going to explain later. And then lower time frame is the time frame that you actually use to find your entry models, to find your entry confirmation, right? To ensure that you are getting in at the right time, at the right place. So yeah, we use the lower time frame for precision, which is why we always start off with the higher time frame. Okay, so we start off with the higher time frame. Like for example, if I'm day trader, my higher time frame will be the 4-hour time frame. So I'm using the 4-hour time frame, and I'm pretty much just going to be seeing the lower highs, low lows, you know, like to see like what's the trend direction. And then once that's done, then I will go down to the medium time frame, which is the 1-hour time frame or the 15-minute time frame, and that is where I'll mark up my supply and demand zones to determine where I want to enter. Yeah.
Okay.
So, for example, right here, you're familiar with support and resistance level, right? So let's say right now on the 4-hour time frame, price is creating higher highs and higher lows. So we know that price is in an uptrend. But the next question becomes, where do we want to actually enter for the trade itself? Which price point gives us the highest probability of entry, right? You know, like if we actually get in at that price point, price is gonna go up. So in order for us to actually, you know, get the timing right, we need to actually mark up our point of interest. So support and resistance levels, I don't use them because they are inaccurate and they are prone to a lot of like market manipulation. which means that a lot of times if you actually draw like a resistance level just like this,
Yeah.
sometimes price will actually go up there, right? So if you are waiting to enter for a sell at this resistance level, but then because of market manipulation, price will go up there, break past that resistance level, and guess what? If you enter for a sell right here, you place your stop loss above the resistance level, you would be stopped out. And then there are also times where the market will go up, but it does not tap into the resistance level and it start reversing. So if you, once again, you're waiting for a sell at the resistance level, you would have missed the trade opportunity itself.
Yeah.
Yeah, so there's a lot of market manipulation, which is why I use supply and demand zones. I use institution zones, right? Which are pretty much point of interest where institutions first entered for like a large amount of buy orders or sell orders, right? So in crypto, we call them the whales, right? Like you're familiar with crypto, right? So for example, we want to identify where the whales have entered, right? For example, let's say this is a demand zone and this is where the whales entered for like a large amount of buy orders, okay? So this means that the next time price actually come down to that same price point, that same demand zone, price is gonna respect it because this is where more whales or the whales who have entered initially are gonna enter for more buy orders. They're gonna scale in to their like large existing buy position. And that liquidity, that fuel, is what's needed to drive price up even further.
Okay.
So that is why we use supply and demand zones.
How often are supply and demand zones appearing?
So it appears on like every single time frame, which is why you want to make sure that you have a very clear structure, because if you don't, you're going to be marking every single demand zone that you can see on the screen, and not all supply and demand zones are created equal.
Okay.
Yeah. So the next question becomes like, how do you mark up the supply and demand zone, right?
Yeah.
So in an uptrend just like this, like what we have established, higher highs, higher lows, right? You get it, the higher highs, higher lows. So there is a few ways to go about it. So when we look at this, you want to identify the pullback before the next impulse move to the upside. Because the impulse move to the upside tells us that institutions have actually entered for like a large amount of buy orders. Because that's what caused price to have the energy, to have the fuel to take out the previous swing high so that it can create like a new high, right? It requires a lot of money for that to happen, which is why we find the origin point of the entire move. And that is where we find, that is where we draw the demand zone. So in this case, price goes up, pulls back, and then this is the origin point of the next leg to the upside, right? The next move to the upside. So somewhere around here, this is our demand zone. So there's a few ways to actually draw it. You can either draw the entire range. So come here, go and find your box 2 itself, which is like somewhere around here, the rectangle too. And then you draw it from the high to the low of like this entire pullback. This is your entire demand zone.
Oh, you don't do it from the closing, you do it from the higher high and low.
This is the consolidation method of identifying the demand zone. But the pivot method, no, the refined method is you just find the candlestick, the origin point, like what you just pointed out right there, this origin point, and then you mark it from the high to the low of the candlestick just like this.
Okay, wait, I don't get this one. Just go back to the previous one.
So this is the consolidation method, right?
Yep.
So we basically mark up the entire pullback, high, low, and then this is the demand zone that created this push to the upside. Okay, so but if you want more precision, you want to use the pivot method, right? Which requires us to actually find the pivot candle itself. Now, what is the pivot candle? The pivot candle is basically the last candle, right? That the first candle that caused this entire move to the upside.
Okay.
So that is where you just follow the smart money footprints. Okay, so this entire move, where did it start from? Just point at like the candlestick right now.
Here?
So this is indeed a demand zone.
But I think probably here.
That's another demand zone. So if you are using the pivot method itself, right, which is the more refined method, okay, so this is the origin point of this entire move to the upside, right?
Yeah.
That is indeed a demand zone.
Okay.
But then there's another demand zone right here as well, which you have pointed out as well. So both of these are demand zones.
Okay.
Yeah. And I know right now you might be confused, like why is there two boxes right here when just now we only have one box of the consolidation zone, right? So the reason why we use the pivot method is because we want to trade with more precision.
Okay.
Because what we are looking for is what? Price to come back to this demand zone so we can get the right timing so that we can actually ride the next leg to the upside,
Yep.
right?
Yep.
Which means that we want to enter for a buy when price mitigate one of these zones.
Yeah.
But if you use a refined zone, your stop loss is much more tighter,
Okay.
which means you will pretty much have like a bigger upside and a lower downside. But if you choose to use the consolidation method, where you take the entire box just like this,
Yeah.
what happens is that if you enter for a buy, the minute price actually mitigate the zone, the first thing is that your stop loss is going to be super wide, just like this, right? So you have like more downside.
Yeah.
The next thing is there's always a chance that price is going to continue going down to grab more fuel before it goes up, right? So price doesn't just usually just tap the zone and just goes up.
Then you might lose all your money because of the stop loss.
Yeah, exactly. Yeah. So it's all about ensuring that we put the odds on our side.
Okay.
Yeah, because that's all trading is. It's not a game of certainty, it's a game of probabilities. Okay. And we do this analysis, we do all of this stuff so that we can identify when is the right when is the right place, which is the point of interest,
Yeah.
and when is the right time, which is the next concept I'm about to teach you, which is called liquidity.
Okay.
Yeah, but so far you're good with
I
everything?
got it. Hey, just now you said pivot point, right?
Yeah.
It's the demand zone, is it?
The pivot point, that's the pivot method, right? So there's two methods, consolidation method and pivot method.
Okay.
Yeah.
Let's do the consolidation first.
Okay.
Yeah.
So no, this method right here, right? This is the pivot method.
Wait, you're teaching the pivot method now, is it?
Yeah.
Oh, later the video very long. Okay.
No, yeah,
Okay.
whatever. Yeah.
Let's go.
It's
Yeah.
okay.
The pivot method, which
Okay.
is
Wait, are we gonna cut this part out? Or?
no.
Okay, cool. Okay, cool. So right now, we saw the higher highs and higher lows.
Yeah.
We know that price is in the uptrend,
Yeah.
and we know that price has pulled back to our demand zone
Yeah.
that caused price to actually take out this swing high.
Yeah.
So what's the next step?
Oh shit, you put me on the spot. Basically, you wait for it to go back up, then actually you can buy now because it's in the demand zone already.
Exactly.
Yeah.
Now the next thing is we gotta enter for a buy, right? We gotta enter for a buy. But once again, the hard part is when, like the timing part, because there's this Wall Street adage which says that being early is just as bad as being wrong.
Okay.
Yeah, so it's all about ensuring that we get in the right time.
Okay.
So in this particular case, the first thing you must understand is that we do not go down to the lower time frame until price step into this box.
Okay.
Yeah, so if price was like over here,
Yeah.
we don't want to go down to the lower time frame because that's not a good price point to get in for because it's not at our demand zone yet.
Yeah.
Yeah, so we wait very patiently until price mitigate this demand zone. And now that price is at the demand zone,
What is mitigate this demand zone?
bounce off.
Oh,
Yeah, bounce off. Yeah, so we only go down to the lower time frame to analyze what's going on down there once price bounces off like this demand zone itself.
Okay.
Yeah, so over here, bounces off or enter the demand zone.
This is lower time frame, right? Where we
This is
get
the higher
low-
time frame. This high,
the-
on a 4-hour time frame.
Okay.
Yeah, so right now, has price come into the demand zone?
Yes, sir. It's in
Yes,
the box already, man.
it's in the box, right?
Yeah.
So now we go down to the lower time frame,
Okay. Let's go.
which in this case would be the 1 hour.
Yeah,
Yep.
okay,
Yeah.
Right, I'm a bit confused. Just now we got the two demand box, one here, right?
Yep.
This is, you say this is the pivot method, right?
Yep.
How do you get the pivot method again?
So basically, this is the consolidation method, right? You
Yeah.
draw the entire pullback up and down till the next move, right?
Yeah.
The pivot method is you find the origin candle,
Oh, which is this one.
which is this one. This is the lowest candle that led to this move to the upside. So very simple, right? You just find the lowest candle itself. Yeah, the lowest
Why
point.
don't choose this one?
This is also a demand zone, but the reason why I deleted that one is because price is already blushed right through it.
Oh, okay, okay, I got it.
Yeah,
Okay,
price
okay,
is-
price not.
Yeah, cool. So right now price is entered into the demand zone.
Yeah. Now we go look at the higher time frame.
Now we
Sorry,
go down to the lower time frame. Yeah. So this is where, let's say we go down to the 1 hour time frame itself, yeah?
Yeah.
So right now, once again, understand what's the objective of price, okay? So right now, price is in the pullback phase, okay?
Okay.
So we have established that price in the pullback phase,
Yeah.
which means that we need to wait for some form of confirmation that tells us that the pullback is over so that we can actually enter for a buy, so that we can ride the next move to the upside.
Okay.
Yeah, because right now price is still like bearish on the lower time frame because it's facilitating the pullback for the higher time frame itself.
Okay.
Yeah, so
Pullback meaning?
retracement. Yeah, for
Okay.
price to retrace to like this demand zone, the pause before the next move to the upside. Yeah. So
Yeah, rectangle is still here. Interesting. When you change the time frame, that's cool.
yeah.
Trading View like have man.
This is actually Trading View API.
Oh,
Yeah.
okay.
So prices came all the way down to your box right here.
Okay.
All right, and like I said, it's all about confirmation, right? It's all about waiting to get in at the right time, at the right place. And right now, it's already at the right place. It's already at our demand zone.
Yeah.
But the right time requires you to understand liquidity.
Okay.
Okay, so what the fuck is liquidity?
What the fuck's liquidity?
So liquidity is the fuel that the market needs to have the next imbalance to the upside. Remember how we talk about how price has to stop to refuel, get more gas before it pushes to the upside?
Yeah.
Liquidity is what drives this next push to the upside.
Okay.
And
So this is liquidity consolidating.
yeah, this is liquidity consolidating, smart money just accumulating orders so that they can actually cause price to make the next move to the upside.
Yeah.
Now, liquidity is generated by the big banks, right? The smart money, the hedge funds, the billionaire traders, the Wall Street traders, because these are the guys that have a lot of capital. Capital equal liquidity.
Okay.
Capital is what drives the market, right? Yeah. So in this particular case itself, you must ask yourself, right now prices came down to our demand zone and we need the fuel for price to go up, which means we need to wait for the smart money to actually enter into the market, give us confirmation, and then we can actually ride the next leg to the upside. And that involves you spotting liquidity.
See the news cannot.
No. So for the news, right, it's like, okay, there is certain high impact news in trading, right? And when the high impact news comes out, it works. There's a lot of liquidity. There's a lot of manipulation. Price is just gonna like shoot up by like 100 pips in like a matter of like a few seconds, right? But if you do that, that's gambling. Because you have no idea like what the news is gonna come out.
What is pips, bro?
Pips is basically it's like this dollar signs right here, right? So it's a form of measuring a move inside Forex.
Why don't you trade stocks actually? Why do you trade Forex?
I do trade stocks.
Or like why do you choose Forex as your first?
Oh, because like when I started trading, I have like no money. I have like less than $1,000, and for stocks you need like an initial amount of like capital.
Oh.
Yeah, so Forex is like there's a low barrier of entry. You can trade with like $100, $50
Oh,
even.
$50?
Yeah, and you can like make hundreds of dollars with $50 because of such thing called leverage.
Yeah, but then if you're leveraged too much, then you owe the fucking
you
money.
will blow your account. Yeah, like you'll lose. So it's like a double-edged sword.
Hey, crypto also can leverage, right? You can leverage 100x, bro.
Yeah. So Forex is, you can even leverage up to
Forex,
500x.
500?
Like,
So if $50, it can be like 25,000.
Bro, when I started out, I used an account with 800 leverage. So I'll flip like $100 into like a few $1,000s in like a few days, and I'll blow it.
Oh my god.
And I'll blow it.
Wow, that's crazy. You cannot even do that in gambling, guys.
Yeah.
You need to take 800 times.
800 times.
Loan you only can take like, I don't know, God knows how much.
Exactly. That's why so many brokies trade Forex. Anyways, the pip calculator. So basically, it's like sort of like a decimal place sort of thing, right? So when price move, when the fourth figure after the decimal place move up by 1, that's 1 pip. And then if the next figure move up by another 1, that's like 20 pips. No, that's like 10 pips. Fuck, that's like 10 pips.
Okay.
Not 20 pips. So in this particular case, I'll say like, that's kind of good to know. The best way, honestly, the simplest way to calculate how much move it is just go and grab like this measurement tool that we have down here. Come in here, go to price range, just like this, and just drag. Like if you look at this entire candlestick right here, this is the pip count. You can see the last number right here. 266 pips. Yeah, so price just moved 266 pips in this like 1 hour candlestick right here.
What does it mean in dollars? Like pips?
Which brings us to lot size. So in Forex, it's not like, oh, I'm gonna buy €1 USD just like how I buy one Apple stock.
Okay.
You have to buy it in a bundle. You have to buy it in bulk, right? So there is micro lots, there is mini lots, there's standard lots.
Yeah.
Standard lots means you are buying 100,000 units. So if I enter for a buy on EURUSD with a standard lot, that means I'm buying 100,000 units of EURUSD.
Okay.
So I'm taking 100,000 times like the price of EURUSD right now, and that's how much I'm trading with. Like that's the volume that I'm playing with right now. Yeah, so that's the standard lot. And then mini lot is 10,000 units, right? And that's the 0.1 lot, which I'm gonna show you later. And then micro lot is like the smallest lot size, like the minimum lot size is 1,000, right? So like I said, you can't just buy 1 unit of EURUSD. You have to buy at least 1,000 units of EURUSD. That's like the smallest trading volume that you can do as a retail trader.
But then you need to have a calculator for this and everything.
Yeah, I'm gonna show you on Edgeflow.
Okay, nice.
So depending on the lot size that you use, the pip move is different, right? Just now you asked me about like, how does this relate to dollar, right?
Yeah.
How does this relate to how much money you make or lose when you're in trading, right?
Yeah.
Let's say price move from here, right now, that's where it is, to like, say right here, okay? So this is about, how many pips is this?
292.
So 292 pips. And depending on the lot size that you use, it's gonna determine how much money you make or lose. So if you're using a standard lot size, which means you are buying 100,000 units of EURUSD, and price goes up by 292, now you are making 292 pips times $10 per pip. So that's around like $2,920. Yeah. Yeah.
Okay.
So it depends on the lot size that you use. But then if you use the mini lot, which means you only buy like 1,000 units,
Yeah.
then if that's the case, this is how much you make.
Oh, like 20 cents.
$29.
$20.
$29, yeah. So it's like it depends on the size that you are trading with. That determines how much money you make or lose in the
How much
market.
you're willing to lose also, right?
Yeah, how much you're willing to lose. So, yeah,
So just like you told me 800 leverage means...
means you are like fucking full porting your account.
No, I mean like, in terms, like, so you basically you put the lot size like damn high, is it?
Yeah, with like a small account balance. So what leverage means, right, is that if your account today have about, let's say, $800,
Yeah.
right? No, let's say your account have about $80 right now.
Yeah.
And then you choose a leverage of 1:500, right? So that's like a 500x leverage. So now you take the $80 you have in your account
Yeah.
times the leverage, that give you a buying power. So 80 times 500, that give you a buying power of $4,000, which means that you can trade which one?
$4,000. I can trade any, like this one also can trade. The standard lot also can trade.
No, it's the units. It's the units.
Oh, units.
Yeah.
I can trade micro lot.
Micro lot. That's
That's right.
right. That's right. So you will not be able to use the standard lot in this particular case itself. Yeah. Because it requires 100,000 units and you only have a buying power of $4,000. And $4,000 times, let's say the price of EURUSD, that's about what, 4,000 plus?
Oh my god.
So you will not be able to trade like
But then your
this
stop
big
loss
lot
cannot.
size.
Your stop loss is very low already, right? It cannot be like very. That means like
Yeah.
yeah, you cannot like put your stop loss to very deep. It only has to be like shallow, right?
Yeah. Because if it starts going against you, you're gonna blow this $80 in like a
They
few
got
seconds.
nothing, yeah.
Yeah, they got nothing, right?
That's crazy. They let you they let you 500 leverage with an $80 account.
Yeah, even like $20. That's if you go to YouTube, you'll see people like freaking flipping $10 to like $1,000.
But then your stop loss is inexistent. You cannot
It
even
has
put
to
a
be
stop
so
loss.
tight. It has to
Yeah.
be so tight, yeah.
Interesting.
And you have to win the trade. It's like the moment you lose that trade, it's gone.
Okay, that's $20. Actually, that's good. If you like people who like gambling, right? You just put $20 every night. You
Exactly.
watch this video first, then after that, gamble the money.
Exactly. That's why there's so many gamblers in freaking Forex. Yeah. So the difference between gambling and trading is that with gambling, you are taking risks.
Okay.
With trading, you're taking calculated risks.
Okay.
So you are putting the odds in your favor.
Now I know why you
are
don't
taking
go
an
to the
edge.
fucking casino. The other day he was telling me, bro, I've never been to the casino in my life. Then I said, but I'll bring you, bro. It's very fun. Bro, this is way more thrilling than a casino, dude. You get 800x, and that's crazy. What the fuck?
I'm a professional gambler, bro.
Okay, let's go.
Okay, so yeah, man. Right now, prices came to our demand zone, And like I said, it needs the liquidity for it to act as like a fuel to drive price up even further. And where do you think they're going to get the liquidity from?
Huh? What do you mean here? I don't understand. What's your question?
They're going to get it from retail traders. And here's what I mean. The game is rigged against retail traders, which means that if you're trading retail concepts like support and resistance level, you place a support level right here, you enter for a buy once price bounce off the support level, you place your stop loss below the support level, hoping the price is going to go up, but later on, boom, price comes down, smash your stop loss.
Yep.
Market manipulation. And the stop losses by the retail traders, that give the liquidity the smart money need to fuel the price to the upside. It's like they need to make it so that all the retail traders are out of the game so that they have enough buying power, right, to actually move the market with their money.
Wow. So is it right to say that retail traders trade with support and resistance levels and institutional traders trade with supply and demand levels?
Institutional traders they don't necessarily trade with like supply and demand zones, but they are smart enough to wait for the retail traders to get stopped out before they make their entry.
So whoever uses support and resistance levels will die lah. That's what I'm trying to say.
So it's like, based on my experience, yes, but there is some traders out there who uses support and resistance levels, but they are wildly profitable. So it depends on like case-to-case basis, but majority of the traders who use support and resistance levels or chart patterns or whatever like weird retail concepts like candlestick patterns, they tend to end up being the liquidity.
Oh.
Yeah.
Oh, so like I've been studying like what shooting star, all this like candle, it doesn't no use.
It works if you understand the context of the market.
Oh, you have to see what the institutional traders
Traders,
like
where they're
them.
positioned, you have to think like them. Because if you don't, you just blindly spot the candlestick pattern just alone. You can see this is what, like a freaking shooting star candlestick pattern.
Yeah.
And then for buy right here, just get stopped out right there.
Right.
Yeah. So that's the final piece of the puzzle, which is liquidity, which is why we want to enter after all the retail traders get stopped out.
Okay.
This alone will save you like thousands of dollars, right? So at this point of time, prices came down to our demand zone, and he has already stopped out the retail traders. You know, like prices really like swept all the liquidity below these lows right here. But then, if you want to be even more conservative and play it safe, you want to wait for extra confirmation in terms of the internal structure right here, shifting bullish.
Okay.
So you want to see price start taking out the last lower high. Because in a downtrend, price is creating what? Lower highs and lower lows, right?
Yep.
So if it comes up to this last lower high,
Yep.
and it continue going down, then guess what? It's just going to continue going down even further. So you shouldn't be entering for a buy.
Yeah.
So if that's the case, you're much better off waiting for price to go up there and take out the last lower high and potentially create like a new higher low right here to tell you that demand has overpowered supply, buyers have overwhelmed the sellers, and right now we are pushing to the upside. When this happens, this phenomenon is called market shift.
Okay.
Okay, so when price goes up there and take out the last lower high, this is where we're going to market shift. Okay, so that tells us that the pullback is over, and right now we are about to continue to the upside, right? The next continuation move to the upside. Yeah.
So do you wait for the market shift to happen right now?
So in this case, like I said, if you want to play it safe, you wait for the market shift to happen.
Okay.
So right now price is over here doing its thing, right? So if you're conservative, you wait for the market shift to happen. But if you're aggressive, you don't wait for the market shift to happen. You enter right after all the liquidity has been swept. You enter right after all the retail traders have been stopped out. So in this case, all the liquidity has been triggered right here, has been grabbed, and then all the liquidity from this low that we have on the left-hand side right here has also been swept since prices already came all the way down here. Once again, the support level right here. You can see over here, there's like a support level here before price goes up, right? So this is liquidity, this is stop losses.
Okay.
Yeah. So price came down there, swept the liquidity over here, swept the liquidity over here. All the retail traders who entered for a buy here and placed their stop loss below those lows, guess what? They're stopped out. All the retail traders who entered for a buy when price mitigate this demand zone and place their stop loss below this support level right here, guess what? They also get stopped out.
By the way, Brett says stopped out meaning the position is closed.
Close. Yeah, close.
Means they lose their money.
They lose their money, right? They're out of the game, right? So right now, since the retail traders are out of the game, we are potentially having sufficient liquidity for price to move to the upside right now. So if you're aggressive, you enter right now.
Okay.
Yeah, you don't wait for the market shift. You just enter right here because you're assuming that all the liquidity has been grabbed, all the retail traders are out of the game, and smart money got sufficient buying power and sufficient fuel to cause price to move to the upside now.
There's another support level here, bro.
Yeah.
So like, why not we just wait for it to go even lower here? Like, what can I short it to go even lower here?
Yeah, that's a good question. So, like I said, you are very aggressive if you actually enter for a buy right here, because there is still liquidity below this low here.
Yeah.
So ideally, if you want to be like more like conservative but aggressive at the same time, you will just wait for price to come down there, swap that support level, then you enter for a buy.
Okay.
Yeah, and it helps because of the fact that this is also the extreme zone, right? Like this is the extreme of the demand zone itself, which means that price has to hold at this level in order for it to create like a higher low, in order for price to remain in a bullish trend direction.
Okay.
So it has to hold, right? So if you're super aggressive, you can actually enter for a buy right here.
Okay.
I mean, if you're super aggressive yet conservative, yet you want to wait for extra confirmation, you can enter for a buy right here.
Okay.
Yeah. So in this case, I'll let you choose.
Walao. I mean, I have to buy or sell. Wait, can I short or not short?
You can short, but if you want to short in this particular case, the reason why I would not recommend you to short is because of the fact that we are at the demand zone already.
Okay.
And the best time to short is at the start of the pullback. Yeah, because you can ride this move to the downside to the demand zone. So if you're shorting over here at these lower highs, you can target this demand zone.
Okay.
Because we know that price is going to reverse at this area here. So that's the best time to short. So right now, if you try to short here, it's a little bit low probability because of the fact that we're already at the demand zone. And it's kind of like too late.
If you zoom out, right?
Yeah.
There's another support level here, so can we just wait for it to go down here?
So in this case itself, so right now, right, comes back to my question of market structure, right? So market structure says that price has to create higher highs, higher lows, higher highs, higher lows, higher highs, higher low,
Yeah.
higher high, and right now it's potentially creating a higher low.
Okay.
And the reason why price is not likely going to come down here unless the trend reverse is because this is the last higher low.
Oh.
Yeah, this is the last higher low, which means that this new high low has to respect the previous higher low in order for price to remain bullish.
Got it.
So if price later on come down here and take out that last high low, this means the trend has reversed. And right now we are shifting to a downtrend and price is going to create lower highs
So right
and lower
now
lows.
it could go up or it could break this higher low. If you break this high low, that means it's going to down market already.
Exactly.
So now we only look at this one. We only look at this one. We don't look at anything else already.
Exactly. So that is how we define like what we focus on, the swing range, the swing low right here, and the swing high. So this is what we focus on right now.
Hey, it's just a support and resistance, like come on. There's support, this resistance.
Exactly.
But yeah,
Swing high, swing low.
bet is high, low, low, high. Okay, cool.
Cool?
Yep.
So, like I said, 3 options. Conservative entry is you wait for price to take out this lower high here.
Yep.
You wait for extra confirmation. Then you look for your long position. Aggressive entry number 1 is you enter right here since price has swept all the liquidity. And then the next thing is, like what you mentioned, you want to wait for price to actually swap the liquidity down here. That's the third option. So which option will you go for?
I'm gonna buy now.
Hell yeah. Hell yeah.
I'm aggressive because I got 7-figure trader beside me.
Hell yeah. All right, so let's enter for a buy right now.
Yes. Wait, this is actual live account.
Bro, what do you think? No, just now that one was demo. Just now the $1 million was the demo account.
What the fuck? I scared. I'm not gonna read. Wait, what's our leverage, bro?
Bro, like I said, relax, bro. We got edge flow. we got risk management built into it. So I'm not losing that 10K today, man.
Okay.
So right now, you've understood how to trade, Jarren. It's time to put it to a test.
I'm confident.
Hell yeah. I'm giving you $10,000 to trade today. I'm trusting you with this 10K account. Don't blow it. I don't think you'll blow it because you're using edge flow, right? Risk management.
Yep.
Like I said earlier, risk management is a love letter that you send to your future self, and you're the only one that is responsible for delivering it. It's like nobody else is going to do it for you, all right? So, now, you said that you want to enter for a buy right now, yeah?
Yeah.
All right, so let's enter for a buy right here. Okay, so
What did you just do? Can you show me again?
so this is the long position tool on TradingView, which allows you to like forecast your position before it actually happened. So this is where you got your stop loss and you're going to take profit.
Okay.
Stop loss is pretty much the level which like protect your downside. So if price actually go down there and stop you out, guess what? You get out with like a small loss instead of losing your entire account. So stop loss, mandatory and necessary. Take profit is like the profit target. Like where do you want to get out of if the price end up going in your way? Okay, so stop loss is where you get out if the trade idea is wrong. Take profit is where to get out if the trade idea is right.
Okay.
So right now, let's say you want to enter for a buy, and you open a trade over here. Actually, you should do it yourself. Yeah. Just,
wait. If I press this means buy already?
No.
Oh, okay.
So open a trade. So Jarren right now is going to open a trade. Cool. All right. So over here, you can see your balance, $10,000. Your risk per trade, we are going to stick to 1%. For this video or for the rest of the lifetime because I want to make sure that you don't over leverage and you blow your account. The reason why we use 1% is because of the fact that if you use 1% per trade, you essentially have one bullet out of 100 bullets.
Okay.
Right? So you can be wrong 100 times before you blow your account. But if you use 50% of your account on that trade, guess what? You just need to be wrong twice and you lose your entire account.
So I'm only actually trading $100 now.
Exactly.
Okay.
Just $100. Right? So next is where you place your stop loss. So for your stop loss, like I said, you want to place it at a price point which invalidates this trade idea itself. So at this point of time, to keep things very simple, you can place it just below this demand zone over here.
Oh,
Yeah,
why
below this demand zone. Because once again, it's a price point that invalidates the trade idea, which means that if price actually end up going down there, break below the demand zone, break your last high low, we know price is shifting bearish.
So
exactly.
TA is wrong.
Exactly.
Okay.
So that is where I place our stop loss. And then for a take profit, once again, ask yourself, what's the objective of price? Right now, price is going to go up there and continue creating like a higher high till you take out this high here, right here. So we are expecting price to just take out this high here. So this is where you can place your take profit right there.
What the? So high?
Yep. Or to keep things simple, we can just put it to 2R, right? So 2R means that you are risking 1% to make back 2%. So we are risking $100 to make $200 right here.
Do you set your take profit on where you think the chart will go or how much money you want to make?
I personally set based on technical targets, which means where I think price is going to go, which is usually at like the next opposing zone. So if I'm entering for a buy at the demand zone, I'm placing my take profit at the next supply zone because that's the price point where I'm expecting sell orders to step into the market.
Got it.
Yeah. So that's the price point where I'm expecting price to reverse. So I want to get out before that actually happens.
Okay, got it.
Yeah, so in this particular case, to keep it simple for beginners, let's just put it at like 2R.
Okay, so what he's doing is basically he already dictated his supply zone. Then now he just, instead of like putting here to make it safe, then we just reduce it to 2R right now.
Yeah, because to keep things very simple and mechanical, you'll risk $100 to make $200, right? So you're getting back twice in return of what you're risking.
Yep.
Yeah. So that's one thing I wanted to remember. We always make sure that we make every single trade an asymmetric risk to reward decision, which means we never ever take trades that is less than 2R.
Okay.
Right? So if it's like it's freaking 0.9R, it's not worth it because you can lose $100 and you can only make what, $94? Yeah. So we want to make sure that we are always minimum get back twice in return of what we're risking.
So just nice, we start recording, then the chart looks so good for us already.
Yeah, but the chart is actually not that good right now.
Oh shit, okay.
Yeah. Okay, cool.
Cool.
Let me go down. Let's go down to the 50-minute time frame to see it happening.
So where do you put your 800x leverage, bro?
It's not here. It's not here.
Oh.
It's you choose on the broker before you connect it to Xflow. Oh. Yeah. You choose on the broker. The freaking box, man.
Because in Binance, you literally when you're about to buy, right?
Over here.
Then you just
Same thing as Coinbase, yeah.
Oh wait, can I tell you that I blew $200 from trading?
What, crypto?
Yeah, crypto. That's all. Okay,
that's market tuition, bro.
What? Oh, tuition fee, right?
Tuition
that's
fee.
what Jarren always say, bro. He always say, bro, I just lost $200 or something like that. That's a tuition fee, bro. It's like that one. Okay.
Yeah, man. So this is how a day trader would trade, right? So if you get in for a buy right here, place your stop loss below the demand zone, take profit at 2R or the next supply zone. On the 1 hour time frame, this trade will take a few hours to a few days to play out.
Okay.
Yeah, so right now, if you want it to be fast, then that is where you'll be scalping, right? Which means that instead of entering right now at the 1 hour time frame, you enter on the lower time frame, which is the 15 minute, the 5 minute, or the 1 minute.
Yeah.
But since we are beginner, we are not going down to the 5 minute, we are not going down to 1 minute, we're just going down to the 15 minute time frame itself.
Okay. What's the potential upside? 2R meaning we can earn $200.
$200, yeah. Right, so if you go down to the 15 minute time frame, that kind of changes things a little bit. Because what you can do right now to make your entry much more better is you enter for a buy right here, same entry, but the stop loss you can place it below this low right here because we are expecting this low to hold so that price can actually go up, right? So that price can continue the higher highs and lows sort of stuff. So we are anticipating that this is going to be the lowest price and price is going to respect the low so it goes up. So that is where you can place our stop loss, you know, the price point that invalidated this trade ideal.
Okay.
And then you can place our take profit at the next supply zone. In this particular case, this is the next supply zone, right? Because this is where we got this huge selling pressure, pushing price down. Yeah. So that is where you can place your take profit. Or like I said, you can just be simple, place it at 2R. Okay. Yep. Cool. Right, so right now we have our stop loss, we have our take profit, and since we're on the 15-minute time frame itself, this is still more of like an intraday trade, which means that it will take a few hours to play out. Right, so we can check what's the outcome after we enter for this trade itself. So right now you can take the trade. Open a trade. All right. So 10,000. Right. Risk per trade. No, just to get see this. Okay. 1% risk per trade. Market order. Buy. And then it's already selected. And then our stop loss. You can take this number right here because that's where our stop loss is. Right. So you can type it in 1.15694. Cool, and then you'll take profit, place it at right there. So you got your stop loss set, you got your take profit set, and you can see the lot size is automatically calculated for you, which means that you should be using 0.89 lots, right? So that's less than standard lot, right? So every time price moves by 1 pip, you are making $8.90. No, $10. Yeah, you're making $8.90.
Okay, cool.
Yeah. So
why don't you do limit order, by the way?
So limit order is pretty much where you want to get in at a price point that is not currently where price is at right now. So maybe you want to get it like right here or like right here, then you place like a limit order and then you will get tapped into the trade once price eventually reaches that price point. Yeah.
Because usually the market order is like maybe the price will just shoot up a bit, then you know your order will get filled, which you don't really want that.
Yeah. If you want to gain the best price, limit or stop order. Yeah.
Okay, cool. So I will buy now, okay?
Okay, 0.1, 0.9, 1.1. It just
why?
Because this price is moving.
Oh.
Yeah,
okay.
because the price is moving. Okay. Yeah, you can see the lot size get adjusted based on like what the price is at right now. So if the price is fluctuating, the lot size is gonna be like fluctuating as well. Yeah, so right here, if you enter for a buy, that's 0.93 lots. But if you wait a little bit, it could be 0.95, it could be 0.92 because once again, the entry price is fluctuating. So you
I can feel the adrenaline, by the way. Like my heart is beating, I'm gonna fucking buy $10,000 worth of.
No, that's like $100, yeah.
Okay, I buy. Sorry, no English. I'll buy now, okay?
Okay, let's do it.
Wait, you don't seem so confident.
It doesn't matter if we lose, we lose. If we lose, we lose. And then you can choose what emotion do you feel right now.
Rich as.
That's the greedy emotion, by the way.
Oh, shit.
Okay, so right now we are in the buy position. As you can see, this position is open right now. This is how much you have lost so far. $11, right? This is taking into account the fees as well, right? So it's including fees. This is why we go into a drawdown straight away. Because of the bid and ask spread, the commission, the fees, so on and so forth.
What's the fees usually?
Fees, it depends on the size that you trade. If you trade with like a large lot size, the fees is gonna be like $100, $1,000 even.
Oh.
Yeah, but if you trade like a small position size, like a decent one, $11, $10.
$11 for fees?
Yeah, for fees.
That's crazy.
That's fees plus the spread, the bid and ask spread, right here.
Oh, okay.
Yeah,
okay.
yeah, spread, yeah.
Wow, that's a lot of money.
Yeah, man.
All right, I think we should sell because like we're down. No, I'm just kidding. So we'll be back after lunch, guys.
Yep. All right, Jarren. So right now you're down about $18. How do you feel?
I want to close the position. So a little bit scary because, like Brad said, we are doing like very aggressive. Like this is like we don't really know whether you go up or down.
Yeah.
But we buy just for the video sort of, but like also, so basically like Brad dropped 2 rectangles here, right?
Yeah.
If our stop loss hit this bottom rectangle, then we will get stopped out.
Yeah.
So ideally we should have waited for this, but then like, I mean, I'm feeling very greedy right now, so I, I just kind of want to buy right now and make some money quick so that we can go for a Japan trip or something like that.
Exactly.
Yeah, so that's how I'm feeling. I'm feeling a little bit uncertain. That's the moment. Yeah.
That's good. And so that's pretty much what's going through your mind right now. Do you feel fear like that price is like, you know, going against you right now after you enter for the trade?
Yes, cause like it just dipped another $10.
Do you feel doubt?
No, I trust you lah, bro. But you know, I think not really what like, cause we are willing to lose the $100, right? So I'm fine lah. It's not that bad. I don't think. Yeah, if it's like 10,000, I think my heart will be beating like fast right now.
Yeah, exactly. So to me, like what you mentioned just now, like if we lose this trade, we lose and we learn from it, because losses aren't failure, they are actually data points for you to actually get better, right? Like that, to me, I just view them as like market tuition that you have to pay to the market in order to buy wisdom, right? In order for you to learn what went wrong, so you can prevent yourself from making the same mistake again in the future. So if this is the case, right, like for example, you know, you have been trading this way quite some time and you realize that you keep on losing money every time you enter so aggressively, then that's the market telling you that you are doing it wrong, right? Then maybe you should wait for price to come down to like the extreme demand zone, set more liquidity, then enter for a buy. So once again, you use it as like the data point.
Okay.
Yeah, data point to grow. So that is also why like I have this mindset where if you win, you win, you lose, you learn. And also tying back to the point where about the uncertainty, that's the thing about trading, right? Like it's never gonna be like a game of certainty. It's always gonna be a game of probabilities, which means that all you can do is to play the odds. Like all you can do is to ensure that you stack the odds in your favor by looking for as much confluences, confirmations as possible, right? Getting in at the right time, at the right place, and then you leave it to the market. You know, like you leave it to the market to decide like the outcome.
Okay.
Yeah. Because if you don't have an edge, which means you don't wait for your confluences, you don't have a plan, you don't identify trend direction, you don't mark up structure, then you're just gambling. Yeah, because you're not putting the odds on your side.
But we have edge flow, so I have an edge.
Exactly. The edge flow is your edge.
Yeah. So interesting. Cool.
Yep.
Wait, just out of curiosity, so you say you trade 7 figures, right?
Yep.
Is it monthly? Yearly?
That's the total account, total trading account.
Oh, so how much? Like, what are we doing? What would the numbers look like now if you were doing 7 figure trading?
Usually I risk about like 25 to 40K a trade.
Okay.
Right now, like I'm like sizing up. So if right now prices went down like a little bit just like this, I'll probably be down like, I don't know, 10K.
Okay. Jesus Christ. Okay, cool.
10K, 15K-ish. Levels to the game, yeah. Yeah.
Then one more question is that.
But once again, like to me, like that's my 1% per trade, you know. Like the 30K, yeah. So that's why I also don't panic. It's like how you feel right now with your $100 position is how I feel with my $10,000 or like $20,000 position. Because it's like a small pinch to me, yeah. Small account, a small size.
Okay.
Yeah.
So I have a question. Well, let's say we have found like we waited for like 3 days and we finally found like a good entry. Do you full pot everything inside, or do you just like do your normal risk management?
So what I usually do is that I tend to size based on my conviction of the trade idea.
Okay.
So if I'm like, you know, like this is really the trade, like it checks all the boxes, I'll probably risk about 30 to 35K.
Okay.
But then if like, okay, this is the A plus setup, it checks all my boxes, but it's not like, you know, I don't have the balls deep conviction, my gut feeling is not aligned, probably 20K, you know, like 1%, 0.5% per trade, right? So yeah, I size based on my conviction itself.
Okay.
Yeah.
Seems like you'll be a better trader if you're not desperate for money, honestly.
Yeah, because like when I was just starting out, I was super duper desperate for money, right? I was like a gambler back then.
Yeah.
So as a result, I would like force trades even though there's no opportunity. I would chase trade, I would revenge trade after a losing streak because of my attachment to money.
can I give some advice to the audience? It's that like I always listen. I know a lot of traders and I know a lot of like investors, right? And the one thing they say, right, you cannot trade away to get rich. You only can. You must make sure that you have an income first. Then after that, you can leave your job once you have created this side hustle that can create the lifestyle that you want. Yeah.
Exactly. He's right, man. He's right. Use your 9 to 5 to pay the bills, 5 to 9 to build a trading empire.
That's right.
That's right.
Okay, cool. So we'll come back in like what, 1 hour or what?
1 hour or like whenever the trade hits, take profit or stop loss.
Okay. Then we set up the cameras like, oh, take profit.
Hopefully.
Okay. Hopefully.
Hopefully. All right, Jarren. How do you feel about the trade?
We lost money, bro. We lost $100.
$100.
I thought we were gonna win. I thought my 7-figure trader blessing will win.
It is what it is, bro. You lose some, you win some, you know. Today we take a L, tomorrow we come back at it again. Anyways, so right now, like I mentioned earlier, losses are essentially feedback, right? Like they're essentially data points, which is why it's important for us to learn from the losses. Because if you don't learn from it, you're just gonna commit the same mistake over and over again. And if you repeat the same patterns, you get the same results. Right, so right now, since we just took an L, what we're gonna do is that we are gonna go and journal the trade right now. But before I do so, I want to like just quickly let you know how edge flow prevent you from spiraling into like a losing streak. The first thing is we literally set like a cap right here. So once you have taken more than 5 trades or whatever limit that you've set for yourself, you're done trading for the day, right? So right now we have only taken 4 trades, including the trades that we take before this session itself. And it's already 4 out of 5, right? So once this hit 5 out of 5, you literally stop trading, right? So this once again prevent you from taking more trade, making more stupid decisions. Same with like what we have right here. The max loss that is set on this account is $1,000. So if you lose more than $1,000, once again, edge flow prevent you from trading. These mechanisms are set in place in order to prevent you from over trading, revenge trading, you know, just spiraling into like a emotional downfall where you just end up losing even more money.
I physically cannot press the button.
Physically you can't.
Okay, then I just go Binance and do play crypto.
So now let's go and look at a journal, right? So right now this is the trade that you have lost. And if I press view in journal, this is where we can start to journal.
I think we could have predicted it because look at my emotion and entry. You could have predicted the loss, bro.
Yeah, man.
Uh-oh.
Yeah, man. So yeah, this is where I can see all the stats at a high level, and this is where I want you to actually, you know, base the chart, and then you can base your charts right here, and you can actually journal, and you can take your emotion, your entry, exit, the mistakes that you have committed, the entry confluences, and the trade management method. So we are not gonna go through the entire journaling workflow today, right? Because this video is gonna be end up like fucking 2 hour long.
Yeah.
But I just want to say that it's so important for you to actually journal because you need to give yourself the time and space to like introspect and like just review over your losses so that once again, you can prevent yourself from making the same mistake and you can minimize your losses and you can maximize your profits.
But the market is not always the same one. So I journal also no use.
But you are the same. It's like markets will change, market conditions will change, the players will change, but human nature will never change. Which is why if you don't like journal and spot like these unconscious patterns, you are going to like just fuck up over and over again and just, you know, spiral out of control, lose money, so on and so forth. So it's like if you want to get predictable results, which means you want consistent profits, you need to make sure that your actions are consistent and predictable.
Honestly, right, you telling me make money is like literally knowing technical analysis is like 1/4 of the whole puzzle.
Yep. It's like the 3 M's, you know,
yeah,
money management methodology and
mindset.
That's right. That's right.
So do I have to upload this or does Edgeflow auto upload for me?
You have to upload it right now. Like you have to download the screenshot on the chart and then you can just upload it here.
Oh.
Very easily actually. So that's pretty much it. So Jarren, how do you feel about this one-to-one private session?
I'm actually quite happy. I learned a lot from you. Thanks, Brett.
Appreciate it.
And thanks, bro.
Oh yeah.
I think that we didn't make any mistakes. It's just like it was just not our turn. But I learned.
Not our turn. Exactly.
I
It's what
learned-
market.
Huh?
It's market tuition.
Oh, market tuition fee. That's what I always say.
Yeah.
So I think like I said just now, I feel like I learned more than just like trading, but I also learned like how important journaling and meditation and also like your mindset when you're trading is more important than the technical analysis itself. Because honestly, right, what you told me just now,
Yeah.
I think you can learn on YouTube.
Yeah.
But then the mindset on how to trade, I think is a little bit different. No wonder you got the Sanjeev inside to teach mindset. Actually, yeah.
Exactly.
I was wondering why you need some guru to it's all fake, dude. You need mindset, but actually it matters quite a bit.
Yeah, it's very important. So if you guys want more, teaching beginners episodes just like this, we could do one teaching Jarren how to trade options, teaching Jarren how to trade, I don't know, futures or whatever. Let us know down in the comments, right? Because in these episodes, we really break down every single asset class into a level where any beginner can understand. And I hope that I've done a good job. But I hope that Jarren has learned something, has learned how to identify higher highs, higher lows,
Yeah, no high lows.
Yeah, the higher highs, higher lows.
Liquidity consolidation, where the whales are buying. Gee bro, supply and demand zone levels, draw little rectangles.
On the way to 7 figures.
Yes!
That's
I wish!
Hell yeah. Alright, thank you guys, and as always, remember, you're just one trade away.